Sam Slater from FundCalibre, and today I've been joined by John Paul Temperley, who's Deputy Manager on the AXA Framlington Japan Fund. Hi, John Paul.
Hi, Sam. Nice to have you on the call with me.
You're very welcome. The big investment topic at the moment is inflation, because it's hit 5% in the US, it's creeping up here in the UK. But actually, Japan's had the opposite problem for quite a few years now. It's been in a deflationary environment. So presumably for your asset class, a bit of inflation's got to be a good thing. Is that correct? And are you actually seeing inflation come through in Japan?
Yeah, the most recent numbers actually are for some very, very modest CPI inflation. So over the preceding 12 months, we're seeing just something north of 0.1%. As you mentioned, Japan has been in a structural sort of modest deflationary phase over the last 10 to 15 years. And excluding, if you like, the COVID year-over-year impact, that situation is continuing. But that isn't, to us at least, and I don't think the market either, a particularly either a big surprise or something that is altering our stock selection in any particular way.
So would you expect the inflation to tick up anymore, or is it still a fundamental problem in Japan then?
Yeah, well, if you think in terms of just demographics, simply put, the Japanese population has peaked, and the size of the absolute size of the workforce has also peaked. So on those basis alone, you could say that the demand-led inflation in Japan is to some extent, structurally challenged. However, countering that, and something that is interesting us, and I think is quite an important topic for listeners on the podcast today. So, for example, under the leadership of Prime Minister Abe, and more recently picked up by his successor, Prime Minister Suga, there's a long-term emphasis being put on bringing women back into the workforce, and that will certainly be helpful in terms of bringing some greater inflationary effects back into the economy. Japan has definitely lagged behind the West in terms of providing childcare, for example, and that's been a barrier, if you like, to women coming back to the workforce after having a family. So Japanese companies, led by government policy, and also I think increasingly a sense of a societal duty that they want to perform, are doing things like providing nursery care, kindergarten care facilities, even within their own companies, so that women can both rejoin the workforce, but also do so with the comfort of being able to look after their families when they come back.
So you've just mentioned there the transition of Prime Minister last year from Abe to Suga. Suga's actually following all of Abe's, they called it Abenomics, didn't they? So the changes that he wanted to make to corporate Japan, Suga's actually continuing all of that, is he? There's no changes?
Correct. Essentially, he's just picked up the baton of what Prime Minister Abe had put in place. So in terms of corporate governance reform, that was a big one. And in fact, I would say arguably he's also brought to the party something that's definitely another area where Japan has lagged behind the developed world. So he's brought into place policies surrounding digital transformation, and obviously that's been a big theme globally over the last few years. But it's something that Japan has probably been behind the curve, let's say. So in fact, Suga has come in and already very early doors initiated a policy to bring digital transformation at the forefront of corporates' minds and force that through. So it's still not uncommon in small Japanese sort of family-run businesses for day-to-day admin to be done using fax machines, people signing off with old-fashioned ink stamps, which is what Japanese people historically have used instead of a signature. And even just things like that, getting rid of fax machines, getting the internet connections, up and running, and Wi-Fi and so on. That kind of stuff. It sounds simple, but it's stuff that Japan, certainly at the smaller end of the corporate scale, hasn't really embraced fully. But that's changing.
I had a quick look back at the stock market performance since Arbonomics actually began, which is just shy of 10 years ago. And while everyone's sort of been looking at the US stock market and how that's led the world, actually in local currency terms, the Japanese stock market, the Nikkei, has actually kept up with the S&P 500 right up until March this year. So I had a couple of questions around this. The first being, what happened in March to stall performance?
Before I answer that, I'll definitely concur that Japan's had what I would call a kind of stealth move. So yes, the US obviously has gained all the headlines with the big moves in some of our favourite FANGs and tech stock names. But actually, as you say, the Japanese market, admittedly off a low base, has performed remarkably well. We're not surprised by that because valuations were incredibly attractive back at the dawning of Abenomics. And indeed, as we've just touched on, Prime Minister Abe and we think now also subsequently Suga are doing a lot of good things in Japan and changing things for the better. But you are correct. We cannot deny that in the short term, the market has somewhat stalled. I think that's easily explained. I'm not going to sort of be flippant about it. Japan, I think, had Japan's early experience of COVID was probably better than ours in the sense that COVID infections didn't really take off March, April last year. And I think because of that, I think the government was slightly complacent about ordering vaccines. The knock-on effect this year was that Japan has definitely been slower than the UK and even Europe in terms of the vaccine rollout. And I think that's definitely had an impact on sentiment in Japan. And that, I think, alone has been a kind of reason why, sentiment-wise, the market had a kind of somewhat slower relative performance year to date. However, if you look back over a 12-month period, if you include the second half of last year, Japan's still basically neck and neck performance-wise with the US and Europe. So I think it's just a question of timing. And actually, we are looking at the other way around. Looking ahead, we're very positive on the market. We see corporate profit coming through. We think projections are quite conservative. We think valuations are supportive. So while we don't think Japan necessarily is, a million times better than other markets, however, we're definitely very comfortable holding on and topping up Japan maybe after a period of relative modest performance into the second half of the year.
And you mentioned there that the S&P 500 was driven in a large part by the big FANG stocks, the big technology stocks. Japan it's known for its technology, but it tends to be more in the parts area rather than the sexy internet type companies. Are there opportunities there? And can you perhaps talk to us a bit more around sort of automation, robotics and AI, which are sort of these themes that are emerging that Japan seems to be quite well placed to respond there?
Yeah, I love the way you use the phrase the sexy internet space. It's actually, if you look at the profit margins that Japanese companies earn in terms of making hardware that goes into semiconductor chips or high function materials that go into the technology space, they're earning often because of the fact that they have global number one or very high 40-50% market shares in many cases. They're earning 30 to 40% operating margins. Companies that are just, let's say, dare I say it, in the internet service area of the economy, and I don't need to name names in the we know the names in the US. They're earning margins which are probably half of that. So yes, they've had fantastic growth, and I'm not going to sit here and argue that growth can't continue, but equally, arguably, some of the kind of high level growth that we've seen through the last sort of 10-15 years of digital transformation and the improvement in that we've seen, maybe that the rates of growth will slow down, and conversely, the areas where Japan excels in the world in terms of hardware and manufacturing in the high technology space, that is actually going to see structurally very strong demand. So whether it's semiconductor production equipment or high level functional chemicals, also onto the space in terms of next generation pharmaceuticals and biotechnology, Japan in many areas leads the world in terms of intellectual property rights, and that's very obviously an area that we think Japan is not just keeping up but actually leading the world.
Japan's obviously had a very successful car industry as well. So what's going on there in terms of electric vehicles? I'm assuming that's quite a good opportunity too.
I think that I'll say this is a very interesting juncture, and I think Japan is definitely, along with I'd say the German car industry. Japan has a very strong position in terms of being some of the most efficient producers of conventional internal combustion engines. However, I think clearly there's going to be this shift to EV, which is beginning right now, and inevitably going to take a leap forward in the coming decade. One thing I think we would say is, in Toyota, Japan has arguably the most profitable and strongest automotive conglomerate in the world. And in fact, Toyota, they have a fingers in a lot of pies, and also in the supply chain as well. So they are, I think, by dint purely of being extremely profitable, and crucially, that they have already in the last 2 decades transitioned very successfully from traditional combustion engine to being very profitable in hybrid production. So we think they have already a strong lead in the automotive space. And I think it's important to differentiate between the automotive market in, let's say, Europe and the UK, and compare that with the US and Asia and developing markets. So you're right that regulation means that in the UK and Europe, EV is going to become, we think, the kind of de facto standard by 2030. However, the rate of change is significantly different in places like the US, where, excluding California, we think there's still very much going to be a place for combustion engines, and probably as a kind of halfway house hybrid. And then if you move to the developing world, Southeast Asia, Africa, South America, there just isn't the provision or the economic ability to provide enough EV infrastructure. So in those areas, hybrid definitely has a very, very strong future. And for that reason, we think Toyota is going to be, very much the market leader, not just now, but in the future.
That's really interesting. Thank you very much.
No, my pleasure.
And if you'd like to find out more about AXA Framlington Japan, please visit FundCalibre.com, and don't forget to subscribe to our podcast. Please remember, we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or to sell. The fund may or may not still hold these stocks at the time of your listening.